Japan will see a fiscal collapse this year. This if the Prime Minister continues with his stimulus policies to end deflation. Caution coming from the former advisor to billionaire George Soros. And, well, John, what's going on here exactly? Because we've also had the Bank of Japan governor in the mix too.
We have. Takeshi Fujimaki is the former advisor to, or senior advisor to George Soros, a billionaire now. He actually owns his own company. But again, his comments really are about the government will not be able to get the funding if Japanese people, for example, withdraw their savings, their bank deposits, to buy foreign currency costs to offset their fear of a further weakening in the yen. So just trying to be careful, shore up their capital, and that's been their concern so far. So that's what Fujimaki's concern is. And he says the yen may go to 400 to the dollar, which is currently towards 90 right now.
That's quite a call.
It's a huge call. Obviously, it's a bit of a, not quite scaremongering.
It's a headline-grabbing call anyway, to say the least.
Probably the reason why it was mentioned. But that's if the Bank of Japan continues to print, I'd say, a lot of money. So it's a printing of money that will clearly inflate debt, inflate the concerns, and so debt to 45% of GDP. Again, that's twice the size of the US, the most indebted country in the world if it comes this year. But here now is Fujimaki expressing his concern about our base policies.
Abenomics is very dangerous. It only adds more debt to the already massive deficits that Japan has accumulated and would cause long-term interest rates to rise. It may have worked 10 years ago, but with over 10 trillion yen in deficits, Japan may default as early as sometime this year.
Now, the yen is, of course, 120 to the euro and about 89 spots to 3, close to 90 to the dollar. So therefore, we'll see. Again, that's a big, big call. And it's unlikely, but certainly, again, if the Bank of Japan prints a lot of money, and that's the concern going forward, that will be an issue.
Tell me something, Deutsche Bank here, and also the US coming out with some strong words on Japan, and contrarian views as well.
Yeah, James Bullard, who's the Fed president of St. Louis, he says, in fact, and his words are a little disturbed by Japan's stance, and it's the risk of a beggar-thy-neighbour policies. Again, that's clearly a bit of a word of warning. Deutsche Bank, very contrarian this morning. In fact, Henrik Gulberg, the currency analyst there, the yen, he says, will strengthen to 75 against the dollar in the next 5 months because he believes the G7 intervention, coupled with equity markets selling off a little bit this year, and also the spike of volatility, will see the yen strengthen again. If I can throw in this comment as well, Rish, to the Vice Finance Minister from Japan, Nakao, also the top currency official, he says that Japan is trying to defend Japan's policies. Japan is not engaged in competitive devaluation. That's words overnight, and the yen's depreciation is simply a correction, nothing more.
John, I'm going to monitor this, of course, and the yen just below that 90 level at the moment still, and having a bit of a struggle getting through that as well.